All right, so I've been tracking this trend in the market for a while, but this morning when I woke up and did my usual market research scan, so I went through Cookie and a bunch of other sites, I did notice that XRP and Link are the top two coins that have the strongest sentiment and mindshare. And then I started to look into X and I saw that Chainlink was also trending. So I was digging into the reasons why. I already held a Chainlink position, and as I started digging further, I realized I had to make a show because there is a very strong narrative brewing here. And if this narrative plays out, I think there's a good opportunity on a very highly liquid asset to make some good profits. You have many big names talking about it at the moment. Ansem did a tweet saying Chainlink is like Ripple, but if the tech actually worked. Ansem then also said Chainlink at $21 and ENA at 70 cents are not the two highest conviction plays I expected to have going into the second half of the year, but alas, here we are. Now, I've been a holder of Chainlink for a while. It's been in my longer term portfolio, but I am making the decision now to size up on my position. And I had been doing this prior to today, but today I've increased my position even further. And I'm going to explain the reason why I've done this in today's video. I'm also going to explain why there could be an opportunity in the ecosystem here. So aside from Chainlink itself, which I'm going to break down and give you a comprehensive overview of the narrative and the opportunity, I also want to discuss the ecosystem because there are some lower cap plays within the ecosystem that could be higher beta plays as well. I'm also going to give you an entry guide on the Chainlink chart. This is the weekly chart. You can see that it's clearly broken above a very key weekly pivot point. This is like Chainlink's equivalent of the Ethereum $4,000 level, right? It's been a level of significant resistance over the years and support at times as well. And it's now getting flipped again. So I'm going to give you on another chart, on a different chart, I'm going to give you the exact entry framework that you can use if you do an entry. But obviously, that decision will come after I break down the narrative for you. So let's get into the Chainlink narrative, what I'm seeing, why the statistics are looking very strong, why there's a lot of buzz around Chainlink, why there's discussion about Link and XRP. And then towards the end of the video, I'll get into some of the beta plays as well. If you do enjoy content like this, where I give you the latest crypto alpha, make sure you do subscribe to the channel. I'm doing daily uploads at the moment. So if you're discovering this video from search, or if you're an existing Chainlink fan, come and join the community by clicking the sub button. I think you're going to like it over here on this channel because I give very specific, detailed, fundamental deep dives, analysis, and alpha. I think one thing I pride myself on is that I'm super research driven, super fundamentals driven. And I think you're going to see that with some of the pretty crazy metrics that I want to share in today's video. So to go through the narrative here and why this is starting to crop up on the timeline, I want to discuss like where we currently sit in crypto, because this whole narrative is being triggered by something much bigger, and that is the stage that is being set by the Trump administration for asset tokenization and stablecoin growth. So obviously we had the Genius Act, which regulates stablecoin. So we're seeing a lot more stablecoin growth as a result. We are seeing ETH tokenization, crypto being shilled directly by the Trump family. We know they're a big proponent of asset tokenization and are actively pushing it via their own DeFi protocol, World Liberty Finance. Obviously, we know that Larry Fink has been on air for years talking about RWA and asset tokenization. This was one of the big triggers for one of my best trades of the cycle, if you want to count, last year as part of the cycle, which I guess technically it is, which was Ondo Finance from 20 cents to $1.20. I also, obviously, if you've been watching the channel, I've had many other big trades that have pulled big multiples in the RWA space. Mantra, before it collapsed, I think was an 8x. At one point, C-Pool and checks were also up a 6x for me. So RWA has been a big focus of mine for many years, but it seems to be coming to an absolute boiling point now with the real adoption that we are currently seeing. And this is being facilitated by fresh legislation, the Bitcoin and Ethereum ETFs, and also just a stronger focus from the presidential camp on RWA and asset tokenization. And these conditions have resulted in an RWA TVL chart that looks like this. It's essentially up only, now at $13 billion. Now, when I started talking about how the RWA narrative was going to be the next big thing in 2022 and 2023, when it was at $1 billion, I knew it was going to grow fast, but I couldn't have even imagined that it was going to do a 13x in a matter of 2 years. And the crazy part part about this is with the current trajectory of asset tokenization, it very well could do another 10x over the next few years and get to $100 billion to $1 trillion. There is so much capital in the market that could come into crypto. And you might think, oh, why would it come into crypto? Well, let me give you a simple example. If you want to trade stocks on the weekend, currently you don't have many options apart from futures. Imagine if you could trade stocks 24/7, so any time of the day across any time zone, and have instant finality. I mean, if you've ever bought stocks, you'll know that it's a little bit annoying. You get those settlement letters that can take 2 days. If you put your order in after 5 p.m., it triggers the next day. Then you might get slippage. It's quite an annoying process. Imagine if you just had liquid order books, liquid markets all the time for stocks, gold, commodities, etc. Well, this is what RWA facilitates. Also, real estate, the ability to buy, $1,000 of $1 million house, real estate fractionalization, being able to buy $1,000 of a property and then actually loan against it. So put it into a money market like Aave, borrow against your holdings in crypto to go and buy Bitcoin, all on chain, all instant. Being able to travel cross-border with stablecoins and be able to transact in any country with a crypto card. Like all of this stuff, or just, direct crypto to crypto, all of this stuff is now possible. And the reason why the institutions are now jumping on top of this and we're seeing it become a big narrative, it's because they know the old system's broken. They know the old SWIFT system's slow. We're hearing rumors of some banks shifting away from it and onto new systems. And because of this, we are starting to see a narrative being pushed because they know they can front run and get ahead of other nations. BlackRock knows they can front run and get ahead of other fund managers by embracing this. And that's what's resulted in RWA scaling exponentially. What we've also seen is a bunch of big corporations starting to realize this, and they are now also starting to launch their blockchains. They know that blockchains are a great way for them to not only earn more fees and revenue, but being able to develop their user bases as well. And some teams obviously see it as a way for them to extract more profit through launching a token. Also staking. So we are now seeing a flurry of corporations starting to launch their own blockchains. I mean, we saw Tether do it. So, the biggest stablecoin provider, Circle, the other one, they just today, and this is why this narrative is really top of mind at the moment, announced their layer 1 blockchain that's coming. So all of these blockchains are now coming to the market. We already saw Coinbase do their own blockchain. We saw, obviously, Binance do theirs. We saw Facebook do theirs, and then it eventually got spun off into Aptos and Sui. Alchemy Pay's done theirs. Stripe announced theirs, which is Tempo. They're one of the biggest payment providers in the world. All of these big corporations are now launching their own chains. But this is where Chainlink comes in. Chainlink has a very unique moat because the world is heading towards, we're already seeing this world of public L1s. So having stablecoin L1s, L2s, private TradFi corporation chains interacting with each other. Chainlink is a very clear winner from this eventuality with a very high growth potential in this scenario, as Alo points out. Because, as we'll dive in today's video, Chainlink is the backbone of this ecosystem. Any data that you need to communicate with the real world and the blockchain needs to be done through an oracle. Chainlink has 84% of the market share in this space. Basically, 84% of the entire market relies on Chainlink's data to facilitate this. So if a stock price wants to reflect accurately on chain, on many applications, they're using Chainlink. If the price of a good or an asset wants to reflect on chain, they're using Chainlink. If a price on a DEX wants to reflect the current price according to other order books and recalibrate, they're relying on Chainlink. So as Mert also points out here, he says, call me crazy, but all these corporations launching L1s is likely bullish for Link the most. Well, yes, because it's one of the most needed infrastructures powering all of this. Every single application needs an oracle. Now, it's much bigger than just an oracle. We're going to discuss that today with CCIP and staking and the Chainlink Reserve. We're going to get into all of that in today's video, but it is starting to create a very interesting scenario. And as Zach points out here, I mean, XRP has long been hailed as, a big beneficiary of this shift from, SWIFT and traditional banking solutions to the non-traditional or the Web3, the new solutions, right? But if you actually look at real adoption and what's actually being used, and I'm not trying to, throw shade on XRP. XRP is doing really well. It has a huge premium attached, and it's the reason I don't hold XRP long term. I just think there's way too much of a premium in terms of market cap. But if you think about XRP and what it was supposed to be, you can kind of assert that at the current moment, Chainlink is pretty much doing exactly that. I mean, they already have partnerships with Swift, DTCC, Euroclear, JP Morgan, MasterCard. Their BD team's been really impressive. they've got all of these connections with traditional asset managers. They know that they need the infrastructure to be able to facilitate asset tokenization on chain. So although it's slightly different from exactly what XRP is doing, XRP is more of its own like payment stack, whereas Link is more on the Oracle/data side. In terms of its overall like vision, it does seem like Link is doing what people said for many years, XRP would end up doing. Because what we're seeing now are corporations launching their chains directly. So they're not actually using XRP. They're launching their own chains and then issuing stablecoins directly on the chain. They've got their own governance tokens, and then Link is feeding all of the data into the applications on that chain. So it's kind of bypassing Ripple in a way. I know Ripple does have some real partnerships. As I said, I'm not throwing shade on Ripple, but I'm just saying, given the market cap discrepancy, which is a 13x, for me, I think Chainlink is a better proposition given where the market is headed. And the data also kind of backs this up. Zach points out here, he says, Link is better positioned than XRP to benefit from the trillions of dollars in tokenized assets set to come on chain. These assets will flood into blue chip DeFi applications, benefiting the infrastructure that powers them. The XRPL's on-chain DeFi total value locked is currently 85 million from 9 apps. Almost all of that comes from the DEX. That's ranked 54 in terms of chains by TVL. Chainlink on-chain DeFi total value secured across all blockchains is currently 91 billion. So 91 billion from 85 as compared to 85 million. From 452 apps, that's rank 1 in its category by a long shot. Chainlink has 68% market share across DeFi, 84% across Ethereum DeFi. In other words, Chainlink secures 1000x more capital on chain than XRPL does. Mind you, XRP has a market cap now 13x larger than Link. And let's actually dive into the metrics for a second before we get into the economic model. And then once we do that, we're going to get into some of the beta plays as well. And we're also going to chart Chainlink in order to, if you don't have an entry, I've been holding it for a while, but if you don't have, and I'm also adding now actually, but under the pretense of the chart that I'm going to show you, I'll go through the chart as well. But looking through some of the metrics, I mean, transaction value enabled, so TVE is now at 24 trillion over time, so that's super impressive. Total value secured is now 84 billion. It owns 84% market share on Ethereum, and then in DeFi in general, it's over 60%. Over 18 billion total verified messages now as well. So the metrics have been pretty much up only, but you can see a market shift happening in beginning of 2024 in terms of the growth curve for a lot of this growth as well. And I think this is being triggered by the overall RWA trend going up only. So there does seem to be a correlation between the overall size of the RWA market, TVL, and volume in crypto and Chainlink's profitability. And that'll be clear now as we start to get into the economic model. Now, I'll go through this quickly and try and be succinct because there are many moving parts. And honestly, maybe this video needs a part 2, but let me just break down the key things that you need to know in terms of the economics behind Chainlink. And before we get into this, just remember that tokens are often running off speculation. I mean, XRP is certainly not running off the fact at its huge market cap. Let's actually look at the market cap. It's not purely running on the metrics, right? It's running on speculation. So XRP is at 189 billion, which is absolutely insane. And then you got to scroll down to find Link here at 15 billion. So, assets run on speculation, not always fundamentals, but fundamentals could obviously underpin price action. So you're looking for deflationary tokenomics, you're looking for token utility, you're looking for ways that tokens are being taken out of the market. This all puts on supply side pressure, and if there are buybacks, that puts on demand side pressure to underpin sentiment and speculation, which is obviously your key growth driver. So looking at the Chainlink token here, there are 4 ways that the Link token has utility. The first is fees and revenue. So it's essentially the engine of adoption, driving revenue from cross-chain transactions. We're going to discuss how exactly that works in a minute here. Staking and security. So obviously they have their staking. This helps secure the network. They, I think, introduced this last year or the year before. They have their growth programs, so they have build and scale, which are their incentive programs. When we discuss the betas later in this video, that'll make sense. These are projects being supported by Chainlink that are building on Chainlink. And then you have the reserve and value capture. So this is a black hole for Link, converting revenue into a strategic treasury that they've recently started building. So essentially you can think of this as buybacks. We'll also go through the strategic reserve and how that is currently looking later in today's video. As you can see, by overall dominance by TVS, they're well ahead of their competitors, Chronicle, Internal, Redstone, and Pith. So clearly the biggest oracle in the market with the most product market fit. And I think many people that have worked with the Chainlink team would say it's because their team is just one of the best, if not the best in crypto in terms of BD. In terms of the core thesis here, there are 4 pillars that are underpinning Chainlink's future growth. The first one is the TradFi bridge is now opening. So they have integrations with Swift, DTCC, and ICE, and they're moving beyond pilots. So as RWAs begin to move on-chain, CCIP will capture significant value with revenue flowing to the Link Reserve. We're going to discuss that. The deflationary supply squeeze. So as well as this is obviously on the demand side, but with a fixed supply, 2 powerful forces are reducing available Link. Staking, so that's people locking up supply for security and they can earn a 4% yield on doing so. And the reserve, which are permanently acquiring the supply from fees. The Flywheel becomes self-sustaining, with the network shifting from subsidized growth to a model where users fully cover costs and rewards. This makes the economic flywheel more robust. And then the last point that underpins the thesis is the fact the moat is widening. And I think that becomes quite clear when you look at its dominance over the overall market. So how does the Chainlink network value flow actually work? It's a little bit confusing because there are multiple verticals, but this is pretty much what you need to know. You have the Chainlink Reserve, which is an on-chain strategic link reserve. If you do look at the data here, they have been buying back or acquiring Chainlink. The more revenue the blockchain does, the more they acquire. This has only recently started. You can see the recent transactions here. It was met by a little bit of backlash. However, Gamma-chan had some good counterpoints to this. The backlash, by the way, was just due to the amounts being small. But he says almost all of the best setups, 1, have a reason to be FUD'd early on. 2, gradually transition to less reasons to FUD it. 3, the Chainlink treasury has both. Initial buy was small, future buys will be large, more and more FUDders will capitulate as it grows. So obviously the reserve will grow over time. It started small, but you've got to start somewhere is basically what he is saying. You can see here the reserve flywheel in action. So Chainlink adoption increases, protocol revenue increases, volume of linked purchased on-chain increases. Why does volume on-chain increase? Well, that's because people need to pay for their services, as you can see here. So as more people pay for their services, Chainlink's reserve link holdings increase. Financial resources to reinvest into the protocol increase. Platform utility and value for users increases. And as you can see, it becomes a flywheel overall for the ecosystem. There are also a few more sinks. Obviously, staking is another sink. So you can see here that there's a 4.32% reward for staking. The pool right now is full, but over time you may see cap increases, which suck up more link as well. So that is another variable at play here. And then, of course, you also have on-chain revenue. Doesn't need to come in the form of Link, but could come in the form of USDC, Bitcoin, Ethereum. That goes into the fee aggregation contract. That goes to the payment abstraction layer. And then you have this flow of Link tokens going from the DEX to payment abstraction. And this is an automated on-chain conversion into Link if it already isn't in Link. So this is automatically converted. That's how they make revenue. And then you see some flow into the Chainlink Reserve. And obviously some of this Chainlink is also being staked as well. So that's basically the flywheel. It's a little complex, but once you wrap your head around it, it starts to make sense. Obviously, supply side factors are super important, and this will underpin the ecosystem, as I mentioned before. But we know the speculative premium as well that is attached on crypto assets. So part of the reason, and we'll go through the chart in a minute here, that I hold Chainlink is not just because of long-term revenue growth, or although I think it's great to have those fundamentals, it's also because I think in terms of a narrative that retail can understand, it's super powerful. I mean, that's what's basically driven XRP to the heights of the crypto market, right? So now let's go through, now that you have an understanding of the narrative and some fundamentals, what I actually did. So I've been a holder of Chainlink for a while. So this isn't a new token. Maybe if you've been watching the channel for a long time as well, you'll know I've spoken about Chainlink. Not so much in the last few weeks or months, but there was a time where I, spoke about it a lot. But I've still held, long term. It's just been relatively choppy. Like, we had this range here in 2022 where it chopped sideways, broke out, chopped sideways again. I think now why it becomes interesting from a chart perspective is because you are finally seeing a breakout above that key pivot level at the $21 level. And I think this has started to pique a lot of people's interest. Obviously, fundamentally, it's been strong, but now you're starting to see narrative alignment. And this is also aligning, as you can see on Cookie, with community sentiment now, with it being the second strongest token for community sentiment in the market at the moment. And I think what becomes really clear, this is on the logarithmic chart, but it's better for high time frames, is that we are in a channel. on Link. So you could see here we've many times, come up against this top of the channel with Confluence with this 21 level, got rejected, came back up again, deviation above, closed back below, rejected. But every single time we've bounced at the bottom of the channel, we've actually had a strong reaction, and that's what we have seen again. So I think Chainlink is now setting up pretty nicely for a retest of this channel high. So you can see this is the prior high, and then you could see you've also got this channel high at $31. It does look like it's going to make a push to this zone because the mid-range pivot point has been flipped, and that's 43% to that zone. Now, this is why I added to my positions over the past few days. Once it reaches this zone, there is going to be a bit of resistance, and this is also aligning with the cluster from 2021, which was the prior high. So this entire zone here is likely going to be met with a lot of resistance. So expect once it gets near here, potentially it wicks up and then comes below. As long as it's making higher lows, I think dips will be for buying. So this won't be a token that goes up only. It's never like that. It went down here, had a downtrend, had more dips, but the overall trend since 2023 has been up. Just like XRP, it was also in a similar trend before it broke out, right? It was in a very long uptrend actually for like an entire year, XRP. So even if it comes up here, if we do get a rejection back into the mid-range, you want to look for these pockets of confluence to get on board with longs. Now, the real fun for any asset like Ethereum or Chainlink in this case, won't happen until it clears its high from 2021. And I do think this is a realistic scenario given the fact XRP's already done that. Chainlink is lagging, but now starting to catch up. And the narrative is so strong with asset tokenization and RWA. I think the reason I'm more comfortable being in this is because I also view Chainlink as a long-term holding. Like I genuinely don't like holding many cryptos long-term at all, apart from Bitcoin, ETH, Solana, maybe Hyperliquid now, and a couple others, Tau as a long-term AI bet. Chainlink's one of the only coins that I would consider holding long-term. Now, this doesn't mean that I won't take profits. If things go really crazy and we see a 2, 3, 4, 5x, or if we even see it catch up to XRP in any meaningful terms and do a 10x, like obviously I'll start laddering out some profits, even if it's a long-term holding. Even on your high conviction stuff, you've still got to take profits if it's pumping, right? But my goal would be to maintain some exposure to this long-term, given the fact that RWA is just up only and asset tokenization is up only. And even though the cyclical nature of these prices isn't up only, I want to be attached to the growth because that will correlate over a long enough time frame, even if you see decorrelation short-term. So I think overall, looking at this setup, not only do we have a decent setup on the weekly here with this reclaim, but we also have a pretty good setup long-term as well. But if you do want to get an entry, of course, you can look at this weekly level. I can go down onto the 3-day to make it clear that we are starting to hold above. This is one potential scenario that's going to pull us into resistance. Just be very careful of as we're going into resistance, maybe don't start longing really hard here. Wait for a bit of a reaction. Move down to the lower time frames. See how it's reacting to the lower time frames and then take a position accordingly. Basically, how I get entries in the market is I'll look on a high time frame, I'll see where we sit, and then I'll move to a lower time frame and I'll try and get an exact entry. But to summarize, I still think Chainlink is going higher this cycle, and I do think it breaks its prior all-time high. So any dips would be for buying, in my opinion. Now, there are also some interesting plays in the ecosystem, as I mentioned earlier. So aside from Chainlink, I am looking into some of the coins that are building on Chainlink. So if you don't know, Chainlink has a build program where they accelerate partners that are building using their infrastructure. So this is a list of some that are interesting. I'm not endorsing all of these because we just put together this list today. I don't own all of these apart from one. Actually two. I own a little bit of exposure to Truflation, but my biggest position here is in Mind Network, which I took recently. Mind Network is an AI protocol. Technically, it's a quantum-resistant FHE infrastructure protocol backed by Binance Labs. So that's a good connection. But it's also in the build program by Chainlink. They also have an Ethereum grant as well. Interestingly, I don't think many people have pointed this out, but they have collaborations with some really big companies. So DeepSeek integrated FHE for their privacy-preserving model deployment. So this technology is the future, by the way, FHE. I recommend reading into it because it's going to be really important for privacy, especially into the future once quantum becomes a threat. Alibaba Cloud also partnered with Mind Network to deliver secure cloud native infrastructure. Byte Plus, if you don't know who they are, that's basically TikTok's parent company. They integrated FHE into their confidential computing. So these big companies are realizing that this is one of the best ways to actually encrypt data. And we also saw Cozy HQ launch with an encrypted FHE agent with DeepSeek. and on-chain agentic world for secure reasoning and orchestration. So top protocol, top minds behind it. I know the founder well. And yeah, I took a position in this one. I think I spoke about it last week. But as a Chainlink beta, that's part of their build program alongside some other protocols as well that you can look into. The market cap also isn't crazy. It's at 15 million. Price action's been choppy. The market overall's been choppy. But I do think once AI and the market in general heads into better conditions, this one can multiply quite quickly due to its low market cap. But obviously, betas, right? They're not really like exact betas to Link because they're building in their ecosystem. So there may be cross-pollination, there may be cross-promotion at times. There's going to be support. You're not necessarily capturing exposure to the Link run. So I think if you're going to, and if you're serious about Link as a protocol, the best thing to do in many cases when it comes to narratives is just long the leader and then treat separate plays based on their own separate fundamentals. And that's what I'm doing in the case of Link and Mind. But yeah, let me know what you think about Link. Do you hold Link? Let me know in the comments below. For me, this is a strong long-term play to get exposure to basically what I've been harping on about for years now, but also now in the short term, there is a very interesting technical setup with this current channel that we're in, and this is starting to reflect in the sentiment, starting to become more bullish, big names starting to talk about it. So seeing a bit of an uptick, and that's prompted me to increase my position a little bit. So I'll see you in the next video. Remember to subscribe if you enjoy content like this. If you just found the channel, make sure to sub. Welcoming you to the Mars Deutscher fam. We're doing daily videos. I'll be on tomorrow for a charting session with Paradise, hopefully, and we'll go through a bunch of altcoin setups. See you in the next one. Peace out.